Hello everyone, welcome to Apna Performance Club Academy. Today, I have brought you another chapter, chapter 3, Theory of Production and Cost. So guys, here in this chapter, we'll be talking about two units, Theory of Production and Theory of Cost. So basically in this chapter, they have talked about the production, the process of production, how production works, how production takes place, and what are the inputs that are involved in the production and production function. And then we'll be coming to the cost, types of cost. There are various types of cost function, how the cost is used, everything. So we'll discuss everything. But again, guys, remember this is our revision class. To join our regular classes, I have provided a link in description. Please join that. I have provided a WhatsApp link, a WhatsApp group link. Please, if you want to take the regular classes, please join through the link in the description. And okay, let's start. But you know the drill, right? Before starting our class, like, share, and subscribe. Don't forget to do that. Okay, so let's start. So here first we'll be talking about our unit 1, theory of production. Okay. So what is theory of production? See, first, meaning of production. First we'll see about what is the meaning of production and who has defined, who has explained the meaning of production. James Bates and J.R. Parkinson. Guys, I think previously also in one of my revision videos previously I've said to you people, see, always remember this person name, this economist, like the persons who have defined the definition, because these might be asked in your examination as a in MCQ. They might ask, okay? So don't take the risk. Always be prepared for the like for the exam. Like ICAI can ask from any corner of your material, okay? So meaning of production. James Bates and J.R. Parkinson. They have said that production is the organized activity of transforming resources into finished products in the form of goods and services. And the object of production is to satisfy the demand of such transformed resources. So, what are they saying? They're saying that production is nothing but it is transforming. Like you're taking a raw material, transforming that raw material, and turning the raw material into finished good. That is production. The process, what it takes from raw material to the finished good, that process is called production. Okay. So see, production has so many what we call characteristics or factors. We'll see that. Changing the form of natural resources. What do you mean by? What do you mean by that? Changing the form of natural resources. See, the changing the form of natural resources is nothing but the production when it takes place, it transforms the raw material in which state it is, from that to the finished good. So the natural form of the raw material is changing. So that's why we are saying that changing the form of natural resources. That is the first one. Next, changing the place of the resources. Changing the place of resources. See, for example, I have mentioned here extraction from the earth, like removal of coal, minerals, coal, and other metal ores from the mines and supplying them to the market. Like you're extracting from this place and you're selling in another place. Okay, you're like changing the place of that resources of that material. So changing the place of the resources. Next, you have making available materials at times when they are not normally available. Like in this summer season, you can see, right? Mangoes. Some see what people do is they store these mangoes. Like mangoes are not available like all 12 months in a year, right? So what they do is they store those mangoes for so you can supply those mangoes in the future, like whenever like people demand that. For example, suppose in July or in September or in October month. So making available materials at times when they're not normally available. Next, we have making use of personal skills in the form of services. Like we need organizers, right? Merchants, transport workers. So we require these personal skills in the form of services. So then only, right, our production will take place. So like we have transport workers. Like we need transportation. When you're transporting your goods from one place to another place, what you require? You require transportation. So transportation workers. So these are the four what you call points which define production. So they are just basically saying what production does, what happens in production. So we have 4 points. What is that? Changing the form of natural resources, changing the place of the resources, making available materials at times when they are not normally available, and making use of personal skills, making use of personal skills in the form of services. Okay, now we will be seeing about factors of production. These factors of production is actually a very easy concept, very easy concept. Okay. What is factors of production? What does that mean? Factors of production are nothing but inputs. Factors of production are nothing but inputs. What does input mean? An input is a good or a service which a firm buys for use in its production process. So they say saying that factors of production nothing but they are just inputs. And what do you do with those inputs? You use in your business. You use those factors of production in your business. Okay. So we have various factors of production. Most popularly, these land, labor, capital, and entrepreneur. Okay, and we'll be reading about all these one by one. First, we'll be looking into land. What is land? See, in economics, actually, the term land is used in a special sense in economics. Okay, it does not mean soil or earth's surface alone, but refers to all precaves of nature, which would include, besides land in common parlance, natural resources, fertility of soil, water, air, light, heat natural vegetation, etc. So they are saying that in economics, land does not only mean the earth's surface. All these various things are also considered under the definition of land under economics. Okay. So now we're seeing about characteristics of land. What are they? First, land is a free gift of nature, obviously, right? No one has paid money to God, like, please give me this much land. No one has paid, right? So land is a free gift of nature. Supply of land is fixed. You only say, can you increase or decrease the size of the earth? Can you increase or decrease the size of the earth? No. The size of the earth is fixed. That means the land is also fixed. So they're saying that supply of land is fixed. You cannot increase or decrease. And land is permanent and has indestructible powers. Land is permanent. So like even if you want to destroy the land, how will you destroy the land? Even if you dig so much, you'll just find like land, right? There's so much sand that soil will be there. So land is permanent and has indestructible powers. Land is a passive factor. What does that mean? They say nothing but land is lazy, very lazy. So unless and until a human factor is involved on the land won't do anything. If, for example, you just take a empty plot of land, and until and unless a human puts efforts in that land, like he plows the land, like nurtures it, waters the land daily, and give proper seeds, fertilizers, and everything, then only the crops will grow, right? As in, if you just leave the land, obviously it will just waste piece of space. So land is a passive factor. Land is immobile. What does that mean? Land is immobile. That means land is not movable. Land has multiple uses, obviously. On a land, you can build hospitals, school, anything, whatever you want. And land is heterogeneous. What does that mean, heterogeneous? Different in nature. See, no two lands are same in nature. You take the land in Hyderabad and compare that with land in, what do you call, in Sahara Desert. Are they both same? No, the both are not same. The what do you call, the fertility of the soil, the sand is very different. So here the characteristics of land. Land is the gift of nature. Supply of land is fixed. Land is permanent, has indestructible powers. Land is a passive factor. Land is immobile. Land has multiple uses, and land is heterogeneous. Okay. I hope you guys are like able to understand. them. And again, I'm saying, students, see when you watch these revision videos, you get any doubt, mention in the comments. I'll very happy to solve all your doubts. Okay. Next factor of production is labor. What is that? Labor is nothing but any mental or physical exertion directed to produce goods or of services. Any mental or physical exertion. What does that mean? Mental in the sense you're putting your mind in that. Physical is you're using hands and legs. So when you use such things directed to produce a good, to produce a good or a service, to produce a good or a service, it's termed as labor. And of course, please don't confuse between labor and articleship. Okay, both are very different. Again, it refers to various types of human efforts which require the use of physical exertion, skill, and intellect. Okay. Now we'll be seeing characteristics of labor. Labor is nothing but human effort. Labor is nothing. We humans are the laborers, right? We put our skill, we put our mindset, we put our mental, physical health, everything. So human effort. Labor is nothing but human effort. Labor is perishable. What does that mean? Labor is perishable method. So labor is highly perishable in the sense that a day's labor lost cannot be completely recovered by extra work. So it's perishable. मतलब it can deteriorate very easily. See, if ये आज का काम है, you have to do today itself. If you have not done today's work and you have taken leave, आज का today's labor is gone. Who knows? You might have been productive very much today. You might have completed so many tasks today, but no, you instead took leave. So that is labor is perishable, and every day's labor is different. Today you might be productive, tomorrow you may not be productive. So this is labor is perishable in nature. Okay. Labor is an active factor. Land was passive factor. Labor is active factor. Like obviously we humans will be doing the work, right? So labor is active factor. Labor is inseparable from the laborer. Wherever there is a laborer, there will always be a labor. If I'm the one, you cannot separate the labor which is within me. You cannot separate that. Okay. So see, we have laborer is the source of his own labor power. When a laborer sells his service, he has to physically present where they are delivered. If I'm producing a good, if I'm producing good, I have to be physically present there in the factory and produce that. See, that's why they're saying you cannot separate the labor. Labor is inseparable from the laborer. Labor power differs from the laborer to laborer, obviously. Like every, what you call, the physical power of every person is different. Every person has different physical, what you call, physical health. You might be, you might have very good physical health. I might not have that much. There's a like difference. Some people who go to gym, people who does not go to gym, they might have physical health. So that's why labor power differs from laborer to laborer. Okay, all labor may not be productive. That is, all efforts are not sure to produce resources. Labor has poor bargaining power because we have weak bargaining power because what you call we do not have any reserved price. And since labor cannot be stored, the laborer is compelled to work at the wages offered by the employers. Like you're working. Can you just what do you call can you store your energy somewhere else? Like can you store your energy in the fridge and keep it for one day? No, you cannot, right? So and we have no bargaining power. Whatever the employees says or demands or puts on the table, we have to accept. That's why we have very weak bargaining power. And labor is mobile. Obviously, we can travel from one place to another place. There is no rapid adjustment of supply of labor to the demand for it. See, you cannot decrease or increase the supply of labor very easily. See, labor is nothing but like a group of people you need, like for the production purpose to work with. You cannot directly just increase or decrease. If it's decreasing, that means you're removing people. It's not that easy to remove people. And if you're what do you call, new people are joining in your organization to work, then you have to select like what are their skills, what is their experience, are they new joinees, are they newbies? So like again, you have to give them training, everything. So there is no, you cannot directly increase or decrease the labor whenever you want. And choice between hours of labor and hours of leisure, hours of labor and hours of leisure. It is your choice. If you want more wages, you have to work for more hours. If you choose hours of leisure more, then you will get less wages. So these are nothing but characteristics of labor. Human effort. Labor is perishable, labor is active factor, labor is inseparable from the laborer, Labor power differs from laborer to laborer. All labor may not be productive. Labor has poor bargaining power. Labor is immobile. There is no rapid adjustment of supply of labor to the demand for it and choice between hours of labor and hours of leisure. Okay, coming up is capital. What do you mean by capital? This is our third factor of production. Capital has been widely defined as produced means of production, or man-made instrument of production. In other words, capital refers to all man-made goods that are used for further production of wealth. Okay, that is used for further production of wealth. See, the primary factors, the primary inputs are always land and labor. Capital is never the primary. Capital is never the primary factor. See, uh, and capital does not only mean in terms of money. Capital may also be in the terms of what you call, you can say machines, equipments, like your factory or building. You can consider those things as capital also. Now we're seeing types of capital. We have fixed capital. Fixed capital, like we have tools, machines, they're considered as fixed capital. Circulating capital. What is meant by circulating? Like you have seeds, fuel, raw materials, because you need this every day, time to time, for every week, as per your schedule, as per your how much output you're going to produce. Real capital, like building, like physical goods, plants, machines. Human capital. Human capital, nothing but the laborers, the employees, like human skill, ability. Tangible capital. Tangible capital are nothing but the capital which you can touch physically, like you can go and touch. And also we have intangible capital like copyrights, goodwill, patent rights. Then we have individual capital, like it is a personal property owned by individual or group of individuals. Then we have social capital, that is like it belongs to society as a whole. Like we have a road, it does not belong to one person. That is a road used by many people. That is society capital. So these are nothing but various types of capital. Now coming up is capital formation. How is capital formed? How is capital formed? Okay. Now we'll be seeing about that. How capital is formed. Okay. Okay. Capital formation means a sustained increase in the stock of real capital in a country. Sustained increase in the real stock of capital in a country. Capital formation is also known as investment. Now we'll be seeing stages of capital formation. How capital formation is formed? There are three stages. First is about savings, mobilization of savings and investment. What is savings? Savings is nothing but the very basic factor on which formation of capital depends is ability to save. How much you're willing to save, that will determine how much capital you will have in future. See, a rich country has greater ability to save and thereby they get richer quickly compared to poorer country which has no and not ability to save. Because a rich country, whenever they have any like any problem, they use the savings. But the poor country, they don't know how to save. They have no savings. They have to borrow money from someone else. By this, they'll go in debt. So that's why ability to save is very important. Savings. Mobilization of savings. What does that mean? Mobilization of savings is nothing but putting your savings into work. Putting your savings into work. See, it is not enough that people save money. The money saved should be enter into circulation and facilitate the process of capital formation. For example, if you like, you can just can't save your money and put in almari, right? Take that money which you have saved and put it in bank. What will that bank do? They'll take money and provide to the investors. Like so many companies will come and like take loan from the bank, right? Like how do they get the loan? This is how they get the loan. Now, how this is how the bank will give the money because they are taking from us and they're providing to like the companies. And what those companies will do? They'll build their product, they'll sell, they'll earn profits, and they repay to the bank. And what does bank do? They again repay us with some extra, what do you call, some extra profit. That is nothing but interest. That is nothing but interest. So this is how you can use your savings. This is how you can put your savings into work. Mobilization of savings. See, next we have last investment. Okay. Now I said you will put your savings into work. When you have a huge amount of savings ready with you, how about you put that use that savings and go and buy property or gold bonds or cryptocurrency or put in stock market, like buy a property, invest in something, like not for short period but for a very long period of time. So that is how what we call this capital is formed. That is how a capital is formed. Savings, mobilization of savings, and we have investment. And coming up is last factors of production, entrepreneur, very important one. What is entrepreneur? See, that is nothing but a person who combines all the factors of production in the right proportion and initiates the process production and weighs the risk involved in it. Like, okay, I have land, I have labor, I have a capital. Now, what should I do with this? I require a person who will put all these three into use, who will use all this way, land, labor, and capital into use. He'll invest that. He'll take all that, like a plot of land, he'll take. He'll say that, okay, I have this much land, I require only four people. He hires only four people. Then he uses his capital in that, pays them money, and they will also start the production on that. So you need an entrepreneur here. What do you need? An entrepreneur. So an entrepreneur is nothing but a person who initiates the business, who starts a business, and he takes a lot of risk because no business is what we call like the future is very uncertain. You can't say that I'll earn profits for sure. Anything can happen in future. So he bears a lot of risk. Now we'll be seeing functions of entrepreneur. What is the functions of entrepreneur? First coming up is initiating enterprises and resource coordination. Initiating business enterprise. Initiating that means starting the business. Initiating business enterprises, starting the business, and resource coordination. You have all the resources. Coordinate all the resources and put those resources into work. Coordinate all the resources and put those resources into work. So there is the main first function of the entrepreneur is initiating business enterprises and resource coordination. Next, we have risk bearing or uncertainty bearing. We have risk bearing or uncertainty bearing. Yes, every business has lot of uncertainty. See, risk does not only mean a natural risk, but also we have financial risk. You have taken a loan from the bank, and like tomorrow, who knows the interest rates are going very high, and who knows if the budget is introduced tomorrow and our what do you call our taxation system has changed, the tax rates have changed. So this the financial risk is involved, right? This is nothing but financial risk and uncertainty. Uncertainty like what if even tomorrow in or in near future, what if we face a same COVID-like situation? Same COVID-like situation. In COVID-19, we have said every business has like almost failed or they have incurred loss. That is nothing but risk bearing, which is ready to bear the risk and uncertainty. And next is innovations. Innovations is nothing but always bring new ideas because it shouldn't be like all our other competitors can copy us very easily. No, bring new innovations. When you're starting a business, bring in new innovations, new ideas in the market. So these are the three functions of entrepreneur. What is that? First, we have initiating business enterprises and resource coordination. Next, we have risk bearing or uncertainty bearing. Then last is innovation. Okay. Objective of enterprise. Okay, an entrepreneur is running an enterprise. An entrepreneur is running an enterprise. What are the objectives of those enterprise? So here they have mentioned a few general objectives which every enterprise has to comply. Yes, of course, objective of enterprise differs from business to business, organization to organization. But in general sense, there are few objectives every business, every enterprise, every entrepreneur should follow these objectives. Okay. First, we have organic objectives. What does that mean? Organic objectives is like nothing but the basic minimum objective of all kinds of enterprises to survive and to stay alive. Obviously, like first we don't think about profit. First, we say that we have to sustain ourselves in the market. You have to survive in the market no matter what. That is nothing but organic objective. You try to expand your business, you try to grow your business. Okay, that is your organic, because that is the like basic objective. That is like obviously every business will have this objective. That's why it's organic objective. Next, we have economic objective. What is that? It's nothing but the profit maximizing behavior of the firm has been the most basic in assumption made by economists over the last more than 200 years and is still at the heart of new classical microeconomic theory. What are they saying actually? They're saying that economic objective, every business has a profit motive, right? No one is doing a charity free of cost. No, we everyone are here for the money. We want profits. That is nothing but our money is economic objective. See, under this assumption, the firm determines the price and the output policy in such a way as to maximize profits, to maximize his profits. That is nothing but our economic objective. Then we have social objective, like we have few objectives towards the society, like to maintain a continuous and sufficient supply of unadulterated goods and articles of standard quality. Unadulterated goods, nothing but we have tobacco, alcohol, such things should be banned. Such things should not be produced. And articles of standard quality, a good quality goods should be produced. And to avoid profiteering and anti-social practices, to create opportunities for gainful employment for the people in the society. It's not like you're just uh, all about profit. No, we should also see that and creating opportunities for the people in the society. Again, to ensure that the enterprise output does not cause any type of pollution, air, water, noise. Like you're also taking care of environment, surroundings, nature. That is your social objectives. Then we have human objectives. That means to provide fair deal to the employees at various levels. Like you have employees at all the levels, right? So you're giving proper wages, proper salary to them, and to develop new skills, abilities, provide work climate in which they will grow as mature and productive individuals, like helping them to develop new skills, okay, and to provide the employees an opportunity to participate in decision making, like hearing them, like you're asking them, yes, say me, what is the problem you have? I'll solve your problems. And do you want to put some inputs in the decision making process? Like we are going to start a major new project in the company. You want to give your inputs, you want to say something about that, you should ask your employees, and to make the job contents interesting and challenging. It's not like just monotonous work you have. Like you're just come every day coming in, sitting in front of the computer, just control C, control V. No, something more challenging. Like people actually put their skill into the use, put their skill into work. So that you could also see the result. You could also see the advantage, the benefits it will create in the office among the employees also. So that is nothing but human objective. And we have national objectives, nothing but it is towards our country to remove inequality of opportunities, provide fair opportunity to all to work and to progress, to produce according to national priorities. What is our priority? What is our national priority? To help the country become self-reliant and avoid dependence on other nations, right? And to train young men as apprentices and thus contribute to skill formation for economic growth and development. Like now, it's okay. Now, like take the youngsters, take them, give them opportunities. Because young people, they have more innovative ideas. They like come from the current generation. They know more about the trends, what is happening. So, what we call, take such people in your company. So this is nothing but national objectives. So what are the five objectives we have seen? We have seen first organic objectives, economic objectives, social objectives. Then we have human objectives, and last is national objectives. Right. Enterprise problems. Now we are coming is enterprise problems. Every enterprise has few problems, right? So now we'll be seeing what are the problems faced by the enterprise. First, problems relating to objectives. What does that mean? See, you have thought that what do you call you have an objective. The objective is to maximize profit. Okay, Your first objective said that I want to increase my profit. I want more profit. And also you kept an objective that you want to also increase the market share. Do you think these both objectives can be achieved together? No, you cannot achieve these two objects together. So see, in maximizing profits, what do you have to do in maximizing profits? You have to increase the price. If you're increasing the price, do you think all the customers will stay with you? No, they'll go to your competitor. And do you think when all your customers, when all your buyers are going to your competitor, your market share will increase? Okay, fine, you have increased the price, you're earning the profit. But by that, your market share is decreasing now. So there is a conflict between your objectives. So that is nothing but problems relating to objectives. Then we have problems relating to location and size of the plant. See, way to locate the plant. Okay, if I have a what we call land, and here are the natural resources where we extract. Will I locate my plant also here only? But if I locate my plant here, then I have to take all those materials and again have to transport till to the like actual market where the goods are sold, right? So it's not, it's putting a lot of transportation cost for me. So the problems, where to locate, shall I locate where is the warehouse located, or where the actual market, where like where actual demand is there, or like where the all raw materials are extracted. Where should I locate the market? Where should I locate? The problem relating to location and size of the size. How much size should I like have my very small or huge? The problems relating to location and size of the plant. And we have problems relating to selecting and organizing physical facilities. What does that mean? Relating to selecting or organizing physical facilities in the sense, which type of production process do you want to select? We have labor intensive techniques, capital intensive techniques. We have so many other types of production. But which one you want to take? Which one will help you incur less cost and also provide a good efficient output? That is problems related to selecting and organizing physical facilities. In today's world, there are very different kinds of technologies, and the more the good the technology is, the more complex it is, right? So, organizing physical facility, like which type of equipment should I use, which type of machinery should I use, and if you want to install that machinery, you have to know everything about that machinery. How does it work? How does it start? The daily maintenance, how much it requires, and you require someone to inspect that machine time to time. So this is nothing but problems relating to selecting and organizing physical facilities. Then we have problems relating to finance. Problems relating to finance are nothing but see, determination of the amount of funds required for the enterprise with reference to physical plans already made. Okay, fine, I have already made a plan. Do I have that much money with me right now? Do I have that much money with me right now? Assessment of demand and cost of the product. Okay, so this is the demand. How much cost should I incur? Okay, how much cost should I incur? Estimation of profits on investment and comparison with the profits of comparable existing concerns to find out whether the proposed investment will be profitable enough or not. So you're investing in estimating your profit. Okay, if I put this much money, this much profit will I get? Are you actually incurring or earning that much profit? So these are nothing but problems relating to finance, problems relating to money, problems relating to organization structure. See, as your firms grows, the number of people also grows in your firm. The number of people increases, right? So what happens due to because of large number of people, you have to divide the people into each department, like in which area, in which field they are expert, in which what do you call in which that space they are more comfortable, they have good knowledge, they have good experience. So what you have to do, you have to divide all the groups, and you have to always continuously manage all the groups, all the departments. You have various departments. In every CA firm, you can see you have an audit department, you have a litigation department, you have consultancy department, you have a refund department. Various kinds of departments you will have and there should be someone who will be looking over all the departments. So that is nothing but problems relating to organization structure, problems relating to marketing. If you don't market your product in a good way, then how will people get to know about your product? Marketing is a very key essential factor, you know, what we call to earn profit. It is for the survival and growth of the enterprise. And see, when you market, so when you take a decision about marketing, these are the four things you have to keep in mind always. Product, like the what kind of variety, quality, design, features, brand name, everything. And promotion, like in what way are you selecting to promote your product? Like, are you using what social media? Are you using like you're paying what do you call the movie stars so they can endorse your product? You should also see the price, how much price you're charging, the discounts you're allowing, the allowances you're getting, and the place. Nothing but policy regarding coverage, outlets for sale, channels for distribution, location, everything. So these are all of the things you have to keep in mind for the marketing. And if any one thing goes wrong in this, it will affect your product, it will affect your enterprise, it will affect the profit. It's nothing but problems relating to marketing. And we have problems relating to legal formalities. What is that? Problems relating to legal formalities. Like in today's world is very complex actually. Today's this generation very complex because even if some one small thing happens, the other person can go to the court and sue you. So to protect yourself from such unwanted legal, what do you call, legal actions, to protect yourself, so they involve lot of what they call lot of paperwork. You have to roam from this desk to that desk, this advocate to that advocate. From they'll give one date, and if that date on that date it is not solved, then you have to go on another date. Then there's so many holidays will coming in between. There is problems relating to legal formalities and problems relating to industrial relations. Okay, you both might be competitors with each other, but also you should always have a good relationship with each other. You should also have a good relationship with each other because just because you're competitors, you can end up a bad relationship, and this might affect your industrial relations. People in the industry, they always expect a good relationship. So these are nothing but the problems the enterprises faces. Problems relating to objectives, problems relating to location size of the plant, problems relating to selecting and organizing business facilities, problems relating to finance, problems relating to organization structure, problems relating to marketing, problems relating to legal formalities, problems relating to industrial. Now coming up is production function. What is production function? Production function is nothing but it is a statement of relationship between a firm's scarce resources, matlab limited resources, and the output of results from those resources. That is the relationship. And we have few assumptions for the production function. That is, first assumption, we are assuming the relationship between the inputs and outputs exists for a specific period of time. Second, we are saying it is assumed that there is a given state of the art in the production technology. That is, any innovation would cause change in the relationship between inputs and their output. And the third assumption, we're saying that whatever input combinations are included in a particular function, the output resulting from their utilization is at maximum level. You're utilizing your inputs to the maximum level. So these are three assumptions of production function. Okay. It is nothing but minimum quantities of various inputs. Minimum quantities of various inputs required to yield a given quantity of output. That is production. Now you have Douglas production function. It's nothing but they have just given this one formula. Here is nothing but two American who came and they just followed this formula. Okay, Q is equal to KL power A into C power 1 minus T. And we have law of variable proportion or law of diminishing returns. What does that say? The law states that as you increase the quantity of one input which is combined with the other of fixed input, the marginal physical productivity of variable input must eventually decline. What does that mean? Do you understand anything from that? In simple words, I'll tell you. An increase in some inputs Related to other fixed inputs, well, in the given state, technology cause output to increase, but after some point of time, the extra output resulting from a same addition of extra input will become less and less. For example, if I say this is summer, mangoes, and you like mangoes very much, every day you're having one mango, one mango, one mango, one mango, one mango, one mango. Like every day you're having, okay? Instead of having one mango, you have decided to have two mangoes. So one day you had two mangoes. Next day you have two mangoes. On third day also you tried having two mangoes. And on the fourth day you were like, no, enough. As soon as you increase the number of mangoes from one to two in a day, my satisfaction towards that mango was like, nee, nee, mangoes are enough. I don't want any more mangoes. I can't eat this many mangoes. That's enough. I can't. Like when you are having one mango daily, your utility was same, right? But as soon as I increased the quantity, they increase the input. Okay, at some point you will be like, wow, I can have two mangoes daily. But after a few days, what will happen? Your utility will start decreasing. You'll be just like enough with the mango. That is nothing but our law of variable proportion or the law of diminishing returns, decreasing returns. Okay, so that was our unit one. Okay, in where we have talked everything about production. Now, here cost unit two. Here we'll be seeing about cost. This chapter is very small, actually, not that long. Okay, so first we'll be seeing various kinds of cost. Huh? So we'll think accounting cost, economic cost. What is accounting cost? Accounting cost, nothing but see, relate to those costs which involves cash payments by the entrepreneur of the firm. Like cash, you can actually record in the books. That is your accounting cost. Like you have expenses, right? You have expenses. All those expenses can be recorded. You have got so and so thing. You have like paid wages. You have paid electricity bill. That is your accounting cost. Accounting costs are the expenses already incurred by the firm. Accountants record these in the financial statements of the firm. And next we're having is economic cost. What is the economic cost? See, an entrepreneur may devote his time to his own work of production and own have contributes his entrepreneurial and managerial ability to do the business. So when economist is putting his work, putting his like lot of ability, lot of time into the production, can you record that cost? Can you record that cost? No, you cannot record that cost. Nothing but economic cost. Nothing but economic cost. See, the normal return on money capital invested by the entrepreneur himself in his own business. Or the wages or salary not paid to the entrepreneur but could be earned if the services have been sold somewhere else. Rather than him working on his business, if he went and joined a huge company, he would get salary for that. But no, he's putting his time and efforts for that. And that is nothing but economic cost which cannot be recorded in the books of accounts. Okay? And we have outlay cost and opportunity cost. Okay. Outlay cost involve actual expenditure of the firms, like we have wages, materials, rent, interest, everything. Opportunity cost, this is saying, is concerned with the cost of the next best alternative opportunity which was foregone in order to pursue certain aspect. You have two choices, either go for job A or job B. But you have chosen to go for job A. That's like you choosing that alternative over job B, like choosing the next best alternative. You're saying, okay, job A is better than job B. So I'll take job A. That is opportunity cost. Like you have an opportunity, but you have to choose only one thing. So that is cost of the next best alternative, which was forgone, like which you left because you were choosing something else over something else. Okay, and we have direct or traceable cost or indirect or non-traceable. Direct costs are nothing but directly related to the manufacturing product. Okay, they are directly. Indirect are nothing but they're not easily identified in relation to plant production. They're not directly what you call traceable. Okay, they're not directly traceable. Then you have incremental cost or sunk cost, nothing but incremental cost are related to as a concept of marginal cost. Marginal is nothing but additional cost. The incremental cost refers to the additional cost incurred by the firm as a result of business decision. Because of some decision, you have to incur some extra expenditure. That is your incremental cost. Then you have some cost which is nothing but costs which are already incurred once for all and cannot be recovered again. Cannot be recovered again. Then you have historical cost and replacement cost. What is that? Historical cost is nothing but cost incurred in the past on the acquisition of a productive asset. In the past, 10 years back, you bought this land. What was the value at the time? Historical cost. Replacement cost. Money expenditure that has to be incurred for replacing an old asset. You're selling your land now. What is the replacement cost? How much money you're getting? Private cost, social cost. Private cost nothing but cost actually incurred or provided for by the firms and as either explicit or implicit in nature. Then we have social cost, nothing but refers to the total cost borne by society on account of business activity, includes private cost and external cost. Then coming up is cost function. What is cost function? It is nothing but it is a mathematical relationship between the cost of a product and various determinants of cost. We have various determinants of cost, that is the relationship between the cost of a product. If the cost of a product is 100 rupees and various determinants, you will have so many determinants of the cost. What is the relationship between the two? And due to the change of one or the other determinants of the cost of the product will change. That is what cost function talks about. Okay. Then we have short run total cost. Now we will be seeing about two types of cost. Okay, short run total cost, long run total cost. First, we are coming at short run total cost. In short run total cost, we will be seeing various types of cost. Okay, how short run total cost has been transferred. First is fixed cost. What is that? See, it is nothing but a fixed amount which is incurred by the firm in the short run when the output is smaller. I can say our rent. You are paying rent like 10,000 per month for 12 months. That is your fixed cost. Like it is fixed, like you have mentioned the examples here. Contractual rent, insurance fee, maintenance cost, property taxes, interest on capital employed, manager's salary, watchman's wages, everything. So this is the graph. Fixed cost is parallel to the output. You can see this is the graph, complete fixed cost. It is very completely fixed. Okay, it just goes on straight line, no up and down. We have variable cost. Variable cost nothing but it changes with changes in output. It changes very frequently. If today is 100 rupees, tomorrow will be 200. Again, it will be 150. Again, it will be 300. It will be like that. Variable cost. So this is how variable cost changes. Like from going bottom to top. Okay, this is how variable cost. You have semi-variable cost. Semi-variable cost is sometimes it is fixed, sometimes it changes. Okay, that is semi-variable in nature, not perfectly variable and not absolutely fixed. Sometimes fixed, sometimes variable. Okay, then we have stage step variable cost. See, it goes in the form of stage. Sometimes it will be very straight, matlab it is very fixed. Sometimes it will just increase, like variable cost. Again, it will go in straight line like fixed cost. Then it increases in variable cost, like going in the form of steps. So then, hence the name, stage step variable cost. Okay. Then we are having economics and diseconomics of scale. What is this? Economics and diseconomics of scale. Because here in the economics and diseconomics of scale, we'll be seeing the problems, the internal problems or the external problems a business faces. Internal problems and the external problem the business faces. And how do they overcome this? This economies is nothing but disadvantages in economics. Okay, first we have the scale of production. First we have the scale of production. Okay. The scale of production, what is that? See, economics arising out of large scale production can be grouped into categories. That is internal economics, external economics. Okay, we'll be seeing about these two one by one. First, we'll be talking about internal economics and diseconomics. What is that? Internal is nothing. Initially, firm enjoys internal economies of scale, but it is related to internal in business, like inside the business, only within the boundaries of that business. First, we'll see about technical economies and diseconomies. See, like technical things, like we have. See, it becomes possible to use more specialized and efficient forms of capital, especially special capital equipment, machinery, like technical things we are talking about. What kind of technology should I be using in my business? What kind of equipment should I install? What kind of machinery should I install? And if is this machinery good? How long this machinery will run in the business? Like all those technical things. And what is the what you call diseconomics related to this? What is the disadvantages relating to this? A firm experiences net diseconomies of scale. Why? This happened because when the firm has reached a size large enough to allow utilization of almost all the possibilities of division of labor and employment, more efficient machinery, further increase in the size of the plant will bring what about high long run cost because of difficulties of management. Okay, now you have seen that your what do you call your business has increased a lot. More people have been employed. So for to more people, you have to divide the labor. You have to divide your all the employees in groups. See which group will perform which activity in which field, in which area they're expert, they have knowledge, they have experience. You have to divide everyone in that. Okay, so and to manage it more efficiently, you require more efficient machinery. The increase in the size of the plant will bring about high run cost. So much cost will be involved here. So that is the this economics involved in technical economics. Next, we have managerial economics. What is that? It is nothing but refer to the reduction into under managerial cost. Matlab, when output increases, specialization and division of labor can be applied to management. It becomes possible to divide its management into specialized departments, specialized personnel like production manager, sales manager, finance manager. You divide everyone like this. Divide every department in these categories. But what is the this economics relating to managerial economics? Like beyond a certain limit, managerial laborers this economic setting, like communication at different levels, such as between the managers and among the managers become difficult. Like all the department managers, like sometimes some may be busy, sometimes some may be free. They're not able to find a time together. They are not able to find what we call um, proper communication. So there is that diseconomics involved. Like they are not able to properly coordinate with each other. The structure is more complex. If you want to reach someone, you have to keep a lot of mails. You have to give a lot of calls. It's not like you can just approach that person face to face. Then you have commercial economics and diseconomics. What is that? Production of large volumes of goods require large amounts of materials and components. Like when you're producing in large bulk quantity, you have so much raw material required. A large firm is able to place bulk orders for materials and components and enjoy lower prices for them. So, what is the diseconomics for that? It is nothing but after a optimum scale, like up to a certain scale. Like for example, I'm saying advertisement expenditure, other marketing overheads will increase more than proportionately after optimum scale, like after a certain limit. Your expenditure, your advertising will cost will increase. For example, your competitor is having very good marketing and every customer is attracted to them. Now you have to increase your advertisement also. How will you increase? You will employ, like you'll go on social media, you'll approach movie stars. You have this, what do you call, Instagram influencers. Will they do this free of cost? No. They'll ask so much money. So this is the extra expenditure you will be incurring. Next, we have financial economics and diseconomics. Right? A large firm has advantage over small firms in offer matters related to procurement of finance for its business activities. Because a large firm has large benefit because banks will give them loans easily when compared to the smaller firms. So, for instance, better security to bankers enable of advances with greater risk. So that means that's all. Because we can provide a better security to the bank, banks can rely on us very easily. So an account of the goodwill enjoyed by the large firm. We are a large firm, we have a good goodwill. Investors have greater confidence in them and therefore would prefer their shares which can readily be sold on stock exchange. So what is the disadvantages? The cost of raising finance will raise more than proportionately after the optimum scale of production. This may happen because of relatively greater dependence on external finance. The cost of raising finance will increase more because we are mainly depending on external finance. We are mainly depending on the banks. We don't have any money with us. So the cost of raising finance, like you have to repay the money back, right? You have to repay it with along with interest. So your cost of finance is increasing. And next you have risk-bearing economies and diseconomies. That is nothing but large business with diverse multi-production capabilities is in a better position to withstand economic ups and downs. But risk may increase if diversification instead of giving a cover to economic disturbances increases these. Okay, fine. You're having large business, you can handle any ups and downs. But due to lot of diversification, you have due to lot of diversification, it will disturb the economic disturbances. It will give you economic disturbances, and because of that, you will face this economics. And this is the last topic, which is external economics and diseconomics. Okay, what are external economics? External economics are nothing but economies which accrue to the firms as a result of expansion in the output of the whole industry, and they're not dependent on the output of individual firms. Here, you're not just dependent upon one individual firm. It's like whole industry is changing. Say this is your firm, and this the whole outside areas are all external. Like total, all like the what you call the demand, the market share, everything's changing around you. The environment is changing around. That is external. Like it is not in the hands of the management. External to the business. So what are the what call economics and diseconomics in this we'll see. First, cheaper raw materials and capital equipment. See, the expansion of industry may result in exploration of new and cheaper resources of raw material, machinery, other types of capital equipment. But this reduces their cost of production and consequently prices of their output. What will happen? Okay, you'll get a lot of cheap materials just because you are a huge firm, you will be producing a large output. Because of these, you'll get getting raw materials and everything in very less cost, right? So that is nothing but you will be due to that your cost of production is also technological external economics. What is that? As whole industry expands, it is may result in the discovery of new technological knowledge, so basically technical knowledge. And in accordance with that, use of improved and better machinery and processes than before will be required. So that means new technologies come, and you have to learn the technology. You should know how to use the technology, and also you have to afford the technology, which might be sometimes costly. Development of skilled labor. When industry expands, the laborers in that area are well accustomed with different productive process and tend to learn a good deal from the experience. As a result, with the growth of an industry in an area full of trade labor is developed, which has a favorable effect on the level of productivity and cost of the firms in that industry. So they are saying that when the industry expands, the laborers will also grow. They will also able to understand what type of what do you call skill they require, what kind of experience they need. Okay, so a skill labor is developed. Growth of ancillary industries. Ancillary industry is nothing but see when industry is expanding, it will increase the growth of number of ancillary industries like other industries which specialize in the production, supply of raw materials, tools, machinery, components, repair service. These kind of industries are nothing but ancillary industries which help them increase. Like previously there were 10 industries, now we have 100 industries. That means the people who used to give us this what you call raw material everything, they also increase, right? How come previously same amount of people who used to give raw material to 10 industries will be able to give same to the 100 industries? No, they should also increase. Okay. So because of that, what will happen? So much wastage will be produced. Lot of wastage will be produced. You should see about recycling and everything. Better transportation and marketing facilities. See, expansion of an industry is resulting from entry of new firms make possible the development of efficient transportation and marketing network. Okay. See, communication systems may get modernized, resulting in better and speedy information dissemination. We have economies of information, nothing but necessary information regarding technology, labor, prices, products may be easily and cheaply made available to the firms on account of publication of information. So all the information is made public. Like we public should also know, we as a customers, that is a right to know what kind of technology using, what kind of like if you see a chocolate, all the ingredients should be mentioned in that cover. What is the product you're putting in that, how much sugar, oil, whatever, what are the things. So that is economics of income. Okay. By this, I'll complete our total chapter 3. Okay. I hope you guys have understood. So please, if you have any doubts, mention in the comments, guys. Mention in the comments. I'm always ready to solve all your doubts. Okay, I'm always ready to solve all your doubts. And also, as okay, I'll end our session. So before ending a session, I'd like to remind you guys again, do like, share, and subscribe to our YouTube channel and check the link in the description. Go join our classes. See if you join our regular classes, which is very beneficial, very useful to you. We conduct lot of tests from time to time. We do a lot of homework so that you people can practice. You can have that what you call better grip in the examination. Okay, so bye guys. Have a good day.